Hey guys, Doug the Retirement Guy here. We got a review of the Tesla Weekly Pay ETF from Roundhill to see if this is a good time to have investment into, if it's good for a retirement and so on. Before we get into this, we're doing a lot of videos out there. We're giving you guys a lot of the weekly reviews, um, trying to show you if those are good to be part of it. We're doing a lot of ETFs, monthly paying ETFs. We're cranking out videos for all the information you guys have given us. All we're asking for, if you can support the channel, go in the description down below. You'll see a thing for Patreon. Click on Patreon. We're just asking if you can support the channel for all the information we're giving you. Click on that. Buy us a Coke. A simple $1, $2, $5 donation. Um, Everything helps the channel. We're just trying to do things as good as you can. So let's get into today's video on TSW. First off, TSW is Roundhill's Tesla Weekly Paying ETF. Now, these guys are really just dialing into Tesla only. Okay. They are basically trying to generate 1.2 times or 120% the calendar week total return of the Tesla common stock. That's all they're trying to do. There's no guarantee that the fund will be successful. There is no guarantee of anything, but they are doing everything they can to generate some decent money from selling the options, selling short call options, long-term options, different pieces of the puzzle, trying to get the 1.2 times the Tesla development. Their distribution rate of 47.68% is great. Their SEC yield is negative 0.38, and there's a reason for that, and it's pretty simple. And then, but the only thing I have there is the expense fees of basically 1%. Is still high, but that's Roundhill's policy. They're going to stick with that. Let's look at the holdings that TSW has, and you will see basically they only own 20% of actually Tesla stock. The rest of it is into their Tesla weekly pay swap. Now, why you see a negative SEC yield, you don't see anything that has any interest. There's no interest, there's no bonds, there's no treasury bills, there's nothing out there. So everything they're generating to get that 47% is coming from the Tesla stock. And Tesla stock has been on a little bit of a roller coaster up and down, especially with Elon, as he stepped out and went to the Doge program. Some people liked it, some people didn't. And now that he's back and making changes, we're going to see some big things happening. So why TSW versus just buying Tesla stock or doing something different with that? Well, TSW basically advertises at 47.68% dividend return. And of course, that's dividends, interest, capital gains across the board. But the real answer to that is they're doing it from dividends. And you're not going to get that from Tesla. Tesla's not going to put money back out there onto the market yet. But you have enhanced exposure. TSW seeks to amplify the returns by targeting 120% of Tesla's weekly performance. They're going to take higher risks. They're going to make different moves. They're going to do a lot of different things to try to generate as much income as they possibly can because they're only focused on one share, one stock, and that's it. The powerful combination. TS provides a potential powerful combination of a single stock leverage and a weekly income. Pretty much what I just said. They're focused on one stock only. All they're doing is we have to generate income from this piece. And when you do that, when you have your team focused on one thing, you get a lot accomplished. You get a lot put into that one piece of the puzzle. Now, they offer a weekly dividend payouts. Now, I will tell you straight out, they're not guaranteed. They want to be upfront. They're very honest with you, is they're not guaranteed any payouts. Now, what can you do with a weekly dividend? Well, you can do regular cash flow, or you can take and reinvest every week, buy more TSW or different fund that you want. It's funny, when we do these things in any of my portfolios, when we have weeklies, What I do is I take the first 3 weeks and I'll reinvest that money. I will take that money and reinvest it back into shares. And then the fourth week, I'll pull out the cash flow um, and what for the basically making the bills, paying everything off. But the idea is we're constantly growing at a very small pace. Give me that. It's a very small pace, but we will reinvest and then take the cash flow at the end. It's a unique way of doing it. So let's take a look at the TSW 1 year return. Now it's funny we play that because this fund only started in February. So we're not looking at this as a full 12 months. This is really about 4 months into this, 4 to 5 months into this. So when it opened up, they opened up at $50. They took the ski slope all the way down to below $30 range, which is basically where it's always bottomed out at. So when we take a look at being at the low bottom of we'll say 20, it's about $28, I believe, exactly. And it always spikes back after that hitting that rock bottom. So it already is telling us where the bottom is on this fund. But then we take a look at the March. The first spike is in March. The next high up where it hit the next peak is at the start of April. Then we get to the drop off of the tariff program, which you pretty much see every stock dropped off in tariff days when Trump came in and said there's doing all these different tariffs. But again, people reacted and then all of a sudden realized, hold it, Tesla is mostly US production. They are doing most of their stuff in the US, and they rocketed right back up and then came through. Then we get into the more of a tax on the Doge and all that going through. But you look at what TSW is actually doing, their performance is they're constantly rocking themselves from the rock bottom back up to where it's comfortably running at a smooth point. This is why I look at this and say in 1 month we're at 30.14% positive gain. Even if we look at the negative 21%, when I say that, we look about the history, as I just explained. We started off at a high number of 50. We know our bottom right now, and we're playing in between the high and the low bottom. And we're basically at a $40 price point, which is very strong and very smooth. I don't expect this to go a lot higher. And if it does go a little bit lower, we're only at worst as of today at $40.29. We're only going to be worse by probably $12. Now that is a lot of money, but there's going to have to something majorly happen for us to say, hey, we're going to lose $12 a share through this program. Now here's where I dial a little deeper into this. What's happened the past month of May? And you see this thing started again down at that just above the $30 line and had the big spike up. Okay, and then it stayed fairly smooth and then took the big jump up when they introduced the new design of the Teslas, the robots, all the different things that they talked about. We had a huge jump up. So this is not just a car manufacturer. These guys are able to grab and do what needed to be done. And I talk about Tesla because this is the only stock they're dealing with. So as Tesla stock jumped, this thing's going to jump. If Tesla stock dropped, these guys are going to drop. Maybe not as much, but these guys are making the changes. They're doing the job that needs to be done and making the improvements to get the return off the money. So you can see we've kind of gone to a little bit of a flat spot now, is at that $40 price point. The dividend charts, well, you're going to say, oh, yeah, it's up and down, up and down. But this thing is up to a 50-cent per week payment. So you got to remember, this is a weekly paying dividend. So it's going to be up, down on a regular basis. But on a whole, most of them are staying above that 30-cent range to the 50-cent range. So it's a nice income that you're getting from this fund. So this one's going to get a little technical here because when we take a look at this, we're trying to do this over a this one's a 4-month period. We don't have a full 12 months. And here's the real problem we ran into is with TSW in February 19th, when it was available to buy, it came out at $51.35. Well, if we bought right then and there, we would have been $10,000 in 194 shares. 1 month later, it dropped down to $29. And it just took away half of our pot. And it's just been slowly developing and trying to regain its control. But look at so we're going to come back and tell you in 4 months, we've lost $2,085 or 20%. But in 4 months, we've gained $900 or 9% in dividends alone. So it's a huge dividend paying program because of the weekly and what they're doing. So far, this fund, you would say you're at down 11.86% as a whole in counting your dividends. I will show you the next screen what we have done. And this is actually what we have bought and we have actually invested in. 319, we saw that thing we thought it was at the rock bottom at $29. We bought it. We bought 335 shares. The next month, we lost a little bit down to the $9,701. But this month alone, we have gained huge. We're up 36%. We've also gained $1,200 in dividends. Okay. Now, why is that so much bigger? That's because we were able to buy more shares. Instead of that $51 price point, we were able to buy $335 worth of shares. So we didn't jump in on this one immediately. We kind of sat back and said, let's let the market do what it's doing. And we've made more dividends than someone who jumped in on day one. Because we believe at that $30 price point was the bottom of the rung. And we said, this is going to work out fine. And now you take a look at us, we're smiling. Excuse me, 3 months into this, we're up 48%. So price adjustment over time. Is TSW time to buy? Quite frankly, I still say yes. $40 is above the 60-day average, which is at $34.94. I always put it to you this way. TSW has a $30 bottom rail. Okay, I believe that bottom is not going to be seen for quite a while. You're 15% above the average. So I would not go heavy into this. I would slowly drip into this one, slowly buying your shares, and with the idea of waiting that anything below 40 is going to be a buy. Anything above 40, you're going to hold off on. Because I believe the new bottom is going to be $40. So is TSW good for a retirement account? My answer to you is actually going to be this. When we take a look at it and you see a dividend looks at 12.62% over 3 months, that definitely looks great. 30% over 12 months, it's not too far. It's not really that bad. If you buy properly, this is the whole key. If you buy properly with weekly paying dividends, 36% gain can be had if you buy at the bottom of the barrels. When you figure out what the bottom is and then buy accordingly, you're going to gain. So yes, this is going to be very strong. If I can get 36% growth on my fund plus a 37% in dividends, if you put those two together, you're looking at 73% growth on your money. Everybody wants that. So I would not be afraid. I would not put all my eggs in this basket. I would have a very, very small portion of it to let it grow over time. But this is definitely how I would play it. Guys, this is Doug the Retirement Guy. If you like what we're doing, give us that thumbs up. We're doing a ton of videos. Don't be afraid to hit that subscribe button. Don't miss a single one of them. And you guys are doing it because we're adding on new subscribers every single day. And leave comments. If we make a mistake or if you don't like what we're saying or you love what we're doing, let us know. Everything helps us get this channel to grow. And our whole goal is to get you to grow your pocketbook so you can get on the retirement life as we are. Again, if you can help support the channel, hit that Patreon. It's down in the description. Thanks, guys, and we'll see you next time.